Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who've subscribed to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both the dollar cost average approach, consistently investing in the stocks within the portfolio every week, and that's what this video is. We are going to cover the $618 in new capital we added to the portfolio, any options I was in, any dividends received, what I bought with this $618. I cover all my investments into the portfolio out in the open. It is free to see what I am doing here. I don't have a paid Patreon account. I don't have any other sites I'm trying to send you to. I'm not having you sign up for any mailing lists or anything like that. It is free to see what I am doing, but if you would like to help out the channel, if you could take the time to hit that thumbs up button down below, make sure you subscribe to the channel, click the subscribe button, join us on this journey to financial freedom, join the Vested Interest community, hit that notification bell so you're notified whenever I put out any new content, and there is the thanks button down below for anyone who might want to buy me a cup of tea. And again, special thank you to those who have subscribed and the viewers of the channel. The channel continues to grow because of people like you. Don't forget to share the videos, and watch time is one of the metrics that the YouTube algorithm uses. So if you could watch the videos to the end, that would really help spread the videos as well. All right, and let's get into the video here. We'll start with options, and we did have one options play hit this week. We wrote several, but this was the only one. We had some takers on the other side, and that is the thing about options. You have two sides of the contract, the person writing the contract and the person who's buying the contract. In this case, on May 19th, which was Monday, we went in and we wrote, again, several contracts, but Cisco was the one, and there's actually two contracts for Cisco, ticker CSCO. This is out of the information technology sector. We wrote two contracts, that's what the -2 stands for, with an expiration date of May 23rd, that would have been Friday, a $66 strike price. So that just means if the price of the shares were $66 or above, those would get called away. The person who is buying this would only have to pay the $66, and then they'd get those 200 shares. And for that, we received a whopping $12.93, but that's all right. I'm going to take every little bit I can, basically boiled down to 7 cents per share there over the course of those 200 shares. And then as you can see, it did expire out of the money, so we kept the $12.93, which is part of that new capital we invested this week, and we kept the shares of Cisco so that we can try to do this same thing next week. And that's really how we're using options, just to try to bring a little bit more money into the portfolio, build out the portfolio a little bit faster. It's almost like free dividends on that position, though we don't always reinvest them back into the same position we bought or sold covered calls on. We do covered calls and cash secured puts, kind of run the wheel on positions. If you don't know what that is or what that means, look up the wheel, options wheel, and you'll understand. I've actually done a video on it. You can check out my previous videos and you'll find one for the wheel strategy. All right, no dividends to really speak of, so we're going to skip by this one here pretty quick. Now into the new capital deployed on the 19th, which was Monday. We added $242.37. With those funds, we picked up 3 shares of Comcast Corporation, ticker CMCSA. This is out of the communication sector. Picked up those 3 shares at $35.45 per share. One more share of Valet, ticker VALE. This is a mining company out of the materials sector. Picked up that one share at $9.78 per share. Picked up 3 more shares, adding to our Occidental Petroleum position, ticker OXY. This is out of the energy sector. Picked up those 3 shares at $42.08 per share. This $242.37, the new shares it picked up added $7.58 in passive income over the next calendar year. We went back in on May 22nd. That shouldn't be the 15th. May 22nd was the buy date here. That would have been Thursday. Added an additional $375.95 in new capital. With those funds, we added 1 more share to our Valet position, ticker VALE. Again, this is a mining company out of the material sector. Picked up that 1 share at $9.72. 3 more shares added to our Schwab Strategic Dividend Growth ETF. And these next two, SCHD, 3 shares there added at $26.05, and Vanguard's total stock market. These two we buy every week regardless of the market. So Vanguard's total stock market ticker VTI, we added 1 share there at $288.09, and the $375.95 new shares it bought added $7.66 in new capital over the next calendar year. Total invested $618.32. Total passive income added $15.24. Now we'll run through the quick sector weight update here. Communications makes up 10.61% of the portfolio. Consumer discretionary is still waiting on adding a position there, a position or two really. Consumer staples makes up 8.84%. Energy at 10.20%. Financials makes up 2.27%. Healthcare, 18.4% of the portfolio. Materials at industrials at 6.60% of the portfolio. Technology makes up 20.04%. Materials makes up 2.37%. Utilities at 3.78%. REITs and real estate here at 5.99%, and ETFs makes up 10.89%. Eventually, ETFs will be the largest position in the portfolio just by the nature of adding to them every single week, regardless of the market. Over here to the right, you can see those same sector weights, the percentages that match up to the pie here, as well as the dollar amount allocated. All right, here it is, and I show this every week. I think it's important for those of us in this space, if we're talking about investing, for us to show our portfolios. So I show this spreadsheet, my portfolio, and I just pull these numbers off of my actual brokerage account, which I run through Ally, but it gives me a lot of information in the spreadsheet. So I show this every week, so you can see out there the ups and downs of the market, the ups and downs of holding individual shares. Sometimes there's going to be pullbacks, sometimes they're going to run up. There's a 52-week low and a 52-week high, and any stock, even ETFs, can retest that 52-week high or 52-week low for a number of reasons, whether it's negative news, negative earnings, forward projections downgraded, lots of different things. A war breaks out somewhere, could impact the energy sector, for example. Lots of different reasons. Tariffs right now are one that's really impacting the market overall. Every other day, I think we have a new report out that the tariffs have changed for this country or that country. We do have a deal. We don't have a deal. We're going to pause tariffs. We're back on tariffs. So that is really impacting the market right now. But there's a number of things that really can impact the market, right? It's just the way the stock market works. So I show my portfolio every week. I think it's important to be transparent to help some of you out there who are maybe on the fence about starting your own portfolio, and some of you who maybe have just started your portfolio, so that you can see, hey, don't sell out of that position just because it's down. If you're investing in good companies, you've done the research, you know what you're buying, you've set a good price, you're buying it in that price. If there's a pullback, right? Comcast, for example, you see is in the red, down 12.23%. Well, I'm still adding to Comcast. I feel like it's still a buy. If it was a buy for me at $39.33, it certainly should be a buy at $34.52. Occidental, I added some to Occidental. You see it's down 12.89%. Same thing. If I thought it was a buy at $47.40 and nothing fundamentally has changed with Occidental, I should still be buying it, which I am. Pfizer I've held off on, but that's because it's one of the larger positions in my portfolio, but I still feel like that's a buy. I may nibble on that a little bit. SCHD, obviously, I feel like it's a buy whether it's down or not. Valet, you saw I added there. It's down, so again, I feel like that's a buying opportunity. CVS is a buying opportunity. Some of the positions that aren't in the red, I feel like are buying opportunities as well. Owens Corning, I feel like at 133.80, that's a buying opportunity. It's under 15% of a 52-week low, right? UNH, I think that probably is a buying opportunity under 300, and it's at 295.57. But I'll wait on that one. That's a recent addition to the portfolio, my newest position. So I'd like it under my cost basis of 270.25, right? So just because you're seeing red, that's what I'm getting at, does not necessarily mean you should be selling out of position. If they are fundamentally sound companies, you've done the research on them, you set a buying price based on a discounted cash flow analysis or another spreadsheet that you use or something like that to come up with a cost range for the stock, then you should be buying. Just because it's red does not mean rush to sell the position. And hopefully this helps some of you out there. Like I said, I'm not a financial guru. I did not go to college for this. My parents don't have a bunch of money. I didn't learn from one of my rich uncles, anything like that. I've picked this up along the way. I'm sharing my results with you so you can see, again, a real portfolio built out over time, understand the ups and downs of owning positions, and hopefully it helps some of you out there get a little confidence to know that you can do the same thing. You don't have to pay someone to manage your money. You don't have to just build your money through a savings account, which a lot more of them are giving pretty good returns now. But you could definitely do better than that. So that's why I show my position. I think it's important to be transparent. And now I'll get off my soapbox and run through the rest of this here so we can finish up the video. In this column, you'll see the tickers, all the different positions in the portfolio, total shares, and all of the numbers will be as of the close of business on Friday. Typically, I actually look in on Saturdays and update this. Total shares in this column, current price, again, as of the close of business on Friday, market value, average cost per share here. That's my average cost per share. This does include reinvested dividends. My purchase price, again, does include reinvested dividends. Total return, whether I'm up or down, you're going to see it. Obviously, if it's red, I'm down. Same thing here, percent return. Whether I'm up or down, you're going to see it. Again, obviously, red means I'm down. The more green something is, means I'm up. Best performers right now are Kroger, ticker KR here, out of the consumer staples sector, and AT&T, ticker T here, out of the communication sector, with some other ones that are doing pretty well. Ally still at 28%. Cisco, that we ran the covered call on, is at 31.32% gains. So some pretty good gains here in some of these. Enbridge is up 23%. OHI, Omega Healthcare, is up 24%. So some pretty good gainers. Rest of them are in the low double digits to single digits. 13% on EPD, 6% on Google. So we're up significantly on some of the positions we've been adding to here, but still adding to Comcast, still adding to Occidental, may nibble on Pfizer a little bit. Actually looking to add some more to Owens Corning. Would love to add some to Union Pacific now that I'd like it under 220, but that's another one that I feel like is at a pretty good price right now. That is, I don't think that's right. I need to look at that. 15% of a 52. Is that wrong? That's for UMP. Yeah, that's wrong. 385. That's definitely wrong. UNH at 272. It's not been there. I need to look at Union Pacific there, where it sits at 15% of a 52 week low. That is not the right number. All right, but anyways, what sector each position falls in, whether they're a quarterly, monthly, semi-annual payer. You can see here those highlighted in yellow are ones that have already raised their dividend. I will adjust this as they raise their dividends. We've got some other ones that still haven't reported out yet. UNH is a new position. It hasn't raised its dividend yet that I'm aware of. Union Pacific has not. Ally, it paused its dividend here a couple years ago. I'm hoping that they restart it again, or it will not be long for the portfolio. CVS has not announced their raise. Kroger hasn't announced theirs. Lam Research hasn't announced their raise. So there's some other positions that still have not raised their dividend, or at least announced their dividends yet. Current yield, my yield on cost, portfolio weighting. So what we saw on the previous slide was each sector weighting. This is each individual position's weighting. And I do have a rule here in the portfolio. I don't want any one position to be over 10% of the portfolio. I don't think we have any. We have some that are, they're not even really that close, but the closest would be Google at 6.43, Lam Research at 6.09, VTI at 6, so that one doesn't matter. VTI and SCHD, I don't have that rule for those two ETFs. Again, they could be more than 10% of the portfolio, and eventually they probably will be. But I don't want any one position to be more than 10% of the portfolio, and I don't want any one sector to be more than 20 to 25% of the portfolio. Obviously, you saw on the previous slide, technology is a little over 20%, so I've backed on adding there. But part of the reason it's at 20% is because Google has rebounded, right? This was in the negative here. I was buying this as it was going down. Same thing with Lam Research. It's rebounded. It's up double digits already. So that's part of the reason technology is above 20% now. Estimated annual income in this column, payout months here, dividend growth year over year, and where a company sits at 15% of a 52-week low. And I do use this as a high water mark. I want my average cost per share to be under 15% of a 52-week low. So total shares here, 7,419.818 shares, $362,025.94 is what the portfolio is currently worth. I do have $338,966.85 out of my pocket into the portfolio. Now, this does include reinvested dividends. I say out of my pocket because if I turned off the DRIP, I do have the DRIP set, just stands for Dividend Reinvestment Plan, which means anytime a company in the portfolio pays out dividends, it goes right back in and buys more dividends of that same position. So this does include reinvested dividends. And again, if I was to turn off the DRIP, those dividends would go in my pocket. But right now, I'm just putting them back into those same positions as they pay out. Total return up $23,059.09. I don't really focus on this. I am up 6.8%. Again, I don't really focus on this because unless I sell out of all these positions, I don't lock in the gains, right? That's the only way I get this $23,059.09 is if I sell all these positions. So I am up 6.8%. It's nice to see, but again, not something I'm really focused on. Current yield 3.628%. My yield on cost 3.875%. And this is what I'm focused on. That's why it's circled in red over here. The dividends paid out by all the positions in the portfolio, the annual payment that I would receive if I was to use this to pay bills, do whatever I wanted with it, go on a vacation, sits at $13,135.76. Back on the upswing here. It does increase week over week, month over month, quarter over quarter, year over year as I add new capital. Sometimes I sell out of positions and reallocate capital across the portfolio. Sometimes we lose a little bit of capital. Sometimes we gain a little bit. The most recent was the sale of AWK, American Water Works. We sold that at a nice profit around 14-15% and rolled those funds into UNH. We're already up on that position, 9.37%. So that was a pretty good move, though it does look like it may be pulling back again. If it gets under 270, I might add a little bit more here. But I think UNH is undervalued under $300 per share. But this is what I'm focused on, guys and gals. Eventually, I will be able to turn off the drip and live off of the annual estimated income that the portfolio provides. And that's the idea behind this dividend growth investing journey that I am on, that eventually this will replace my everyday income and I will be able to live off the portfolio and the proceeds from the portfolio. Now, my plan is to only live off 70%, continue to reinvest 30% either back into the portfolio or 10% back into savings. But either way, I'll only ever pull out 70% of the dividends, and then I will allow the portfolio to continue to grow by reinvesting the remaining 30%. Dividend growth year over year, 6.14%. So the overall portfolio, right, estimated annual income should grow by about 6.14% based on the average here, right? Well, that is really it. Would love to hear from you in the comment section down below. Do we have any of the same positions? What are you focused on buying right now? What do you think of UNH, Universal Healthcare? Most recent addition to the portfolio for me. We did sell out of American Water Works last week and added these 60 shares here. Again, already up 9.37%, but it was up to like $320, $324 at one point. I could have sold for a 15% gain here about 2 days after I bought it. But currently still up 9.37%. Does look like it might be pulling back again. Again, I think it's a buy under 300. I probably won't be adding because again, at $16,215, it is one of the larger positions in my portfolio. So I'm not looking to really add a lot unless it pulls back under this $270.25. But let me know what you think of UNH. I know there's some issues with it. I know there's some investigations going on. You don't get good companies like this without some issues going on in the short term. That's why it is available at the prices that I bought it. And it did drop into the 250s, I think 248 even at one point briefly. So it does have the potential to go back down to those lows as well. All right, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I do the Stock Pick of the Day series Monday through Thursday when the market's open. We look at a company that stock pulled back. So one more reason to hit that notification bell. And if you have a recommendation for that, go ahead and drop it in the comment section down below. I did get a recommendation this week for another update video on General Mills, so I'll try to push that out this week. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, and it is Memorial Day weekend, so happy Memorial Day. I always feel weird saying that because we are celebrating people who died in service of us in the military, fighting for our rights, our freedoms. I am a veteran, so I do really appreciate that. But keep in mind, it is not Veterans Day. It is not a day to thank all the veterans out there. We do appreciate it, but it is a day to remember the people who died in service of this country, fighting for our rights overseas in some pretty crappy wars that probably didn't have a whole lot to do with our freedoms anyway, more to do with helping out the interests of corporations and rather wealthy people. But that's a whole other topic that we won't get to on this channel. But take some time to maybe spend a couple seconds in silence and thank those who paid the ultimate sacrifices for our freedoms. That is what this day, what this day is for. It is not a day to thank the veterans out there. Again, we do appreciate it, but Memorial Day is to thank those who gave their lives in service of our country. All right, I will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm willing to share my opinion. Invest in for educational and entertainment purposes. Investing involves risk. You can lose money, so never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. For those of you who made it to the end of the video, I do appreciate it. Thanks for watching. Don't forget to hit the subscribe button. Make sure you like the videos. Share with anyone you think that might find comment. Drop a comment, or share with anyone you think that might find value in the content, and drop a comment on your way out. And I do appreciate you watching to the end.